Hi, folks. Welcome to the Weekend Investing Daily Bite of 21st November. Suddenly, the USD INR has gone through the roof. The rupee has fallen basically. We are nearing 90 rupees as I speak, 89.6. There are rumors in the market that RBI has let go of its buying and it is allowing the rupee to settle lower. There are a lot of things moving around in the last 24 to 48 hours in the global markets. One, of course, is the tech meltdown that we have seen post Nvidia's results. The other is dealing with Japanese yields going through the roof. So Japan is coming out with a huge stimulus, and that is causing tremors across the world because, as you very well know, carry trade, basically people borrow in Japanese yen and invest overseas for getting a better yield on that. Now, if the yield or the interest in Japanese economy itself starts to go up, that will probably mean a lot of that trade needs to reverse. So there's a lot of flux in the global markets. India VIX is also up. India rupee has crashed. Fortunately, the market has remained reasonably stable for the day. We are at the end of the week. Let's look at some charts. Disclaimer as always, please read the disclaimer fully and only then move forward in the video. Do subscribe to our channel. Uh, you can click on the bell notification if you like. Where is the market headed? Let's look at some charts. So, a mild drop in Nifty. Yesterday, we were looking forward to a new high on Nifty. We missed that by a couple of 100 points. We're still in the running for that. So the move is not yet over. I think if we do drop down, let's say below 25,750, we may go in for a down leg. But till then, the hope that this uptrend remains will continue, minus 0.47% on Nifty. But Nifty Junior is where the picture is becoming more clearer that currently the broader market is not willing to go higher. In fact, it is very happy to go lower. 1.29% down on Nifty Junior. You have 1.14% down on mid caps. You have small caps go down by 1.24%. In fact, it has come at a level which is precarious. If that is broken, we'll see much more downsides as well. And the bank Nifty is down 0.81%, still within the uptrend mode. So the large caps are on one side of the market, and the rest, yeah, actually, I should not even say the large caps. Some parts of the large cap, which are in the Nifty, some of the Nifty banks, they are displaying a very different characteristics from the rest of the market, which is not looking so great. India VIX is dramatically up today, 12%. So you could read this as, the BBC principle, like we keep talking about, that the price is telling you something, but we don't really know what it is. So the Bhav Bhagwanche principle is basically that the price moves ahead of the news that comes through. So these two things, the India VIX and the USD INR, which I'll just show you, are pointing towards that. Gold is very tentative, 0.22%. Silver is actually down 2.21%. Here also a very mixed signal is there between gold and silver. But Bitcoin is something, Bitcoin as well as the entire crypto world, that is something that is really unraveling, minus 5.17% today. And approximately 34% has been lost in just less than 6 weeks. And significant amount of derivatives are built on Bitcoin. So 2x leverage Bitcoin, 4x leverage Bitcoin, 5x leverage Bitcoin. So all those ETFs, all those leveraged bets where people have blindly bought, are getting crushed completely. So while the regular markets have nothing to do with Bitcoin, but there is a wave of fear that starts from one market and can rub on the other markets as well. So as Bitcoin is collapsing, a lot of losses would happen to significant number of people all over the place, and they may have a more conservative approach towards their other assets and start to book profits where they have. So this is sort of a domino effect that can start sometimes, where one market which is not so significant as compared to other markets, but it starts the domino effect going. USD INR, as I was mentioning, has suddenly popped up. So the rupee has crashed down to 89.56 as at 4 p.m. on Friday. I don't know where this goes now. It had been kept at this level by RBI. I would believe RBI would be controlling this to some extent. by offering two-way quotes there. But I think the RBI probably has allowed the INR to fall as other Asian currencies are also falling, and to keep rupee in check with them. Advanced decline trends very very poor. 70 advances to 430 declines. So there, I mean, you had to look with a microscope within the markets to find any stock that was gaining. This is the Nifty heat map, and there are few stocks that are in the green, but you know that green is so pale that you hardly can see it. Indigo, Asian Paints, Maruti, Mahindra, ITC were some of the stocks that had some gain, but significant losses in some IT stocks, a lot of banking and finance stocks, steel stocks, uh, metal stocks, and even infrastructure and defense stocks. And Nifty Next 50 is showing you a completely red picture where no green is virtually visible. And stocks which were holding up very nicely, Hindustan Zinc, HAL, Vedanta, all taking a beating as of today. Mover of the day segment, we had Karnataka Bank move up almost 8%. Performance is great, and banking as a whole is not so badly impacted. And Karnataka Bank in particular has not been hitting new highs, while the bank index has been hitting new highs. So this is a great sort of a move on that bank today. Sectoral trends, all sectors down except Nifty FMCG. So FMCG, normally when the markets are getting crushed, a defensive move happens in FMCG stocks, IT stocks, pharma stocks. Today it was the turn of FMCG and consumption stocks not to fall, but metals fell 2.3%. India defense stocks fell 2%. 1.8%, PSU banks 1.4%. So a lot of losses here in many of these sectors. Metals losing some of the recent ground that made Hindustan Copper, Lloyds, Jindal Steel, Hindalco, and Hindustan Zinc primarily leading the market down. The US market in the previous session completely smashed 1.5% S&P 500, 2% on Nasdaq, nearly 1.7% on Russell, and also 0.8% down on Dow Jones. So complete mayhem in the US markets. Some of the stocks that were collapsing in the US market were AMD, Oracle, Palantir, Intel, and Netflix. Some of these stocks perhaps are a part of the weekend investing US stock strategy, and certainly these are not recommendations to buy or sell. Tweets of the day segment. So this was a tweet from Ritesh Jain, and he said, "Let's look at the second derivative problem." So this is the chart of Bitcoin, and broadly, about 10 to 13% of Canadians and Americans own Bitcoin. So when the value of their asset is going down dramatically, even if they are not selling it, the feel good factor, or the wealth factor that a person feels about his or her asset goes away, and that basically percolates into a uh, second order sort of outcome where the consumer spending can get a bit impacted, at least in North America. So this is the insight into a second order impact of what is going down. The other tweet was about the Japanese treasury. So, as I was mentioning, the yield on the Japanese 10-year bonds is going up. On 10 years and 30-year bond, both are going up. And everybody and their grandmothers have borrowed in yen and deployed in the US, deployed in India, deployed in crypto. So all these carry trades that were using the low yields in Japan as a tool to borrow will get hit in due course of time, and that may form a sort of a wave which can result in a contagion across the world, as more and more people will cut their positions or withdraw from their positions borrowed in yen. It can start a wave of selling across different asset classes, and that is what is the sort of focus of the tweet here, that all eyes should remain on Japanese yield. If the Japanese yield starts to go up dramatically, certainly we will get hit in all asset classes. Today is the day for doing an Ask Weekend Investing round. So we will do this round later in the day. Do watch this episode. If you like this content, please like and share this video. And certainly we will see you again very, very soon. Thanks. Bye.